All right, let's see. All right, good morning, everyone. Welcome in. Just give me 1 second, just setting up YouTube real quick, and we should be all good to go. Today's a big day for the markets. We have a FOMC meeting minutes that will be coming out, and that is pretty much going to set up the sentiment for the markets today, for everything, honestly, from the yen to equities to commodities and everything in between. So a big day today, but we are obviously getting some moves already right at the market open. And that is because of the Treasury's news. So we're going to go over that. We're going to go over what happened overnight with oil, and then also the yen crosses. I think we had a really good Asian session last night too, so a quick update from all of that. So we have a lot to cover today. Let us get started. I think we should be good here. Yep, perfect. All right, let's get started. All right. So 2 days ago, we were looking at, even last night, the day before that, on last week, we were talking about these 30-year Treasury yields being the gravity well for every asset orbit, and that gold was going to be the long regime, but short rising real yields, which is exactly why gold fell yesterday, even as the missiles flew at the UAE. So then yesterday we started talking about an Asian session about the FOMC minutes being basically the fork overnight. That fork, so to speak, got pre-emptied by something even bigger. And that was the Treasury itself stepping in to force yields down. So that changes the entire board that we're looking at this morning, and it flips gold's headwind into a tailwind. So let's walk through all of that. The single biggest variable of the last 2 weeks was the relentless rise in the long bonds that we have saw. So just got a government-sized thumb press on the scale. Basically, Besant's Treasury unexpectedly announced it's at least doubling its buyback of 10 to 30-year debt, and yields dropped based off of that. The dollar also dropped, and this morning we had really good movements on gold, continuing to the upside, really just breaking past all of these right when New York session opened up. Let's take a look at the 30-year. So we dropped from that 5.33 that we had yesterday, and then during Asian session we're sitting right below that 5.3, now coming back closer to the 5.2 areas. Now these were the key areas as 30-year drops below 5.2 to really provide a bit of a relief when it comes to the pressure that we had on gold. And also, let's pull up on USDJPY. So remember yesterday in Asian session, we were talking about those sells from up top there, and then price pulling back down. That's exactly what you ended up getting on USDJPY. On the dollar index, also dropping even further below that 3-month low that price already was kind of hanging around at. We have now accelerated that as we're starting to get a bit of a relief here as well, and the dollar basically dropping. So every trade that we're looking at was fighting the yield headwind just had that headwind basically reversed at this point. But the minutes, FOMC meeting minutes, are still going to drop today at 11 a.m. PST or 2 p.m. Eastern time. So basically today is now turning into a 2-act day. The buyback set the stage this morning, but the minutes are going to be the live catalyst for this afternoon for every single asset that we're looking at. But we're going to take a look at the full playbook for that in just a little bit. All right, let's come back here real quick. So in full detail, this is basically what happened overnight. And the most important policy move that we have actually seen in weeks. So just 2 weeks after publishing its buyback schedule, the Treasury announced this morning that's increasing by at least double the size of its liquidity support buyback operations for the 10-year through the 30-year sector starting September 9th. And it's going from about $2 billion up to a minimum of $4 billion per operation. So the 30-year yield immediately dropped, as we just saw, sitting closer to that 5.2. Sitting closer to that 5.2, we just had a little bit of a bottom weight coming down into the 5.19 area. So now we're looking at, can we see that continuation? The market opened up about 11 minutes ago. We still are going to wait for the hourly candle closure and then look for the potential movements there. And let's take a look at the 10-year, also dropping from that 4.75 area all the way down into the 4.64 area. And this morning, a little bit of a bottom wick into 4.63. So what this actually means, again, reading beyond just the headline and really understanding what's happening between the lines here, the government is buying its own long-dated bond yields to force yields down, or long-dated bonds to force the yields down. So Bessent has said openly his key benchmark is the 10-year, that his job is the nation's top bond salesman. So that is administration putting its thumb on the long end because the yield surge was becoming a political and economic problem into the midterms. And 1 p.m. put it quite bluntly this morning that the administration needs a win, and it's coming in the form of artificially keeping long rates contained. And for us, this basically means that this is a structural bid under bonds and a structural tailwind under gold and risk. So it doesn't fix the deficit or the AI issuance problem. It just leans against them with the government money. So that's basically what we have going on when it comes to the bonds and the treasuries very specifically. Now, looking at the pre-market drop that we've had, let's come over here. All right, the data underneath that supports the easing that we're seeing here in terms of inflation. Import prices have now dropped negative 0.4. We're expecting an increase of 0.1. And we also have export prices that are down negative 1.3, both deeply disinflationary. Housing starts missed by about 12.4%. Inflation is very visibly starting to cool down here, right? And that is what's supposed to help with cooling down the expectations of those September hike odds, which are now sitting around that 30%, a near 65% chance of a hold in the market so far. So the buyback lands on top of an already dovish data backdrop that we already have. But again, we don't want to get complacent here. The FOMC minutes from July 29th meeting, that's going to drop again at 2 p.m. Eastern time. So the key thing that we're watching for here in the minutes is if the minutes read unanimous or dovish, and this whole rally is going to extend out for gold and even for the equities this morning with NASDAQ pushing up, US 30 also pushing up out of that consolidation, and small caps extending out those buys too. And with gold, we can expect that it can continue pushing. We were targeting closer to that 4,400. Once that is broken, we already talked about in Asian session how we're coming closer to 45. So you can already see how we're already headed back up top there. We're going to redo the full technical analysis here in just a little bit. but we just got 15-minute candle closures. New 15-minute candles are forming. So after a massive rally, you can see how the volume is slowly starting to die down. That's the reason why we're going to wait for the hourly candle, because a lot of this was simply based off of the headline, but now reading between the line of actually what's going on. And I guess the word to watch here is if the minutes read unanimous or dovish, this whole rally extends out. If several members were pushing to hike and the minutes read hawkish, then we get a snap reversal on everything that is running or extending out this morning. Gold, bonds, risk, all of it. It's going to reverse. The buyback basically gave the market a dovish head start this morning. The minutes can either confirm it or it's going to crush this entire thing. Now let's take a look at TLT. Right here, our bonds. So TLT broke out pre-market, already up about 1.4%. Let's see. The buyback is the structural catalyst, which we already talked about. And so if the minutes disappoint today, then we're expecting that a buy the rumor, sell the news type of pullback in bonds. Dollar, we just saw sitting at 3-month low. So what we're going to do is continue watching as we're getting closer to FOMC meeting minutes. Continue watching the 30-year, currently sitting closer to that 5.2%. As long as it holds below 5.25, gold and risk still have really good room. A move back above 5.3 after the meeting minutes means that the buyback bid has basically failed and the reversal is back on the table. All right, let's take a look at gold being the story of the day. So real quick, looking at the chart once again, we've got massive movements right when New York session opened up. And then we've got this massive bottom wick and then flip back up and bullish candle closure right at the stock exchange open. So we're getting really nice moves, even with pre-market. It seems like GLD has pushed up really well. So there's 4 drivers that are stacked this morning for that. One is your Iran escalation and the full offensive posture here. The geopolitical bid being number 2. You have the deeply disinflationary import and export prices that we just looked at, firming the rate cut expectations, really just the rate hold, but that's the base case that the market is looking at in terms of, what rate cut is just the base hold. No one's really fully pricing in a full rate cut, but because of that, we looked at the data points yesterday as well, that the market is preparing for potential rate cuts going into 2027. So that's what the market is essentially preparing for. Number 3 is the Treasury buyback that we just looked at as well, easing financial conditions. And the 4th thing is the institutional call buying before today's move. The November $425 call on gold GLD that hit Monday, they are now deep in the money. So smart money was already positioned ahead of the catalyst. We were already looking at buy opportunities to the upside. So anyone who ended up catching those buys in Asian session, right when we were calling this move, you're pretty much solid at this point. You should be taking partials and then looking into some scaling opportunity. That's exactly what I'm doing here too. So one thing that a lot of people, again, tend to miss here, and that is just reading between the lines. It's going to be the options data. So let's pull that up here real quick. Right here. So we already talked about SPY yesterday. We already know about small caps as well. Small caps really had a good rally this morning too. But right now, looking at GLD's options data. And that is, we've got massive call open interest sitting at 415, then 420, and 445 strikes for September. And about 96.7K for the September, about 136 for the September 18th as well for 420, and 445, same exact thing, 120. thousand contracts. So those are dealer gamma positions. As gold pushes up through those strikes, the dealers who sold those calls are forced to buy gold futures to hedge, which pushes gold even higher. That's going to give us even more momentum that we can continue taking advantage of. Those are the type of levels that I want to be positioned well with, because that gives me a lot more volume, which is forcing more buying in the market already. So that is self-reinforcing gamma acceleration loop. So it's why this move can run even faster than people really expect it once it clears out those exact levels. So that's what we're going to continue watching on TrendSpider, which is going to set up really well with the levels that we're looking at XAU USD. So you can take advantage of both on the stock side and then also here on XAU USD. So we already looked at 4,300, the 4,340 area as our key levels yesterday. Let's just go ahead and remove everything. Now we have pushed above that 4,440 area. Let's go ahead and map out our bottom wick for the week. $43.30. You've got your top wick for the week, which is still sitting at your support. Let's just call it 44.70. So on the daily time frame, we're getting a really nice push after a little bit of a bottom wick here. What I am going to continue watching on lower time frames is going to be this exact zone, which is that resistance on the daily time frame. On the 4-hour time frame, we're getting a nice push, and you got a bottom wick on the current 4-hour, which started forming about an hour ago, and then a bit of a push up. So what I'm going to do is let's adjust this a little bit higher, sitting right at 440 on that 4-hour resistance. On the 1-hour time frame, nice push up. Let's see if we can maintain this area as the new support and then a continuation right back up bullish here. So this is still the full dip buy zones that we have been looking at, which is your 4,300, 4,340 area, price tapped into right just below the 4,340 and then continue pushing right back up bullish. So we have Tuesday, which was the buyback preempted, the deep dip that we looked at. Gold based higher and basically ran even higher than that. So now we're looking at any pullbacks that are coming back into this 44.40 area, hold on to a support, and then a continuation right back up bullish. So the upside of that is as soon as we can clear, let's say we establish a support here, and then continue pushing past 44.70, our next stop is going to be to come back up into 4,500. So let's go ahead and map that out too. Let me actually just create a line here real quick. So 44.90, 45 or 4,500, come back up onto the 4-hour time frame. Your previous support and resistance levels that we've had. Same thing on the 1-hour time frame. So a level that price has rejected multiple times. So you have a really good range there to trade. We have about 7 minutes for this hourly candle closure. So we're going to wait for that. And we're not jumping into any moves here just yet. An invalidation of this uptrend is going to be if we get a hawkish minutes reversal that loses that 44 almost 70 area, 44.40 area, this zone, and then a reversal right back down closer to 43.80. So a hawkish minutes could reverse this entire bullish push that we've had. Like I was mentioning just before we looked at the charts here, that if the hawkish minutes come out, then it basically invalidates the entire Treasury buyback momentum or the volume that we had. So we're not going to chase any sort of move here. You're not going to be entering a trade 15 minutes before the minutes are supposed to drop. You're going to wait for the minutes. You're going to look at what type of sentiment setting up. And then that's when you get into a trade after understanding the full sentiment. All right, let's take a look at if there's anything on silver. Make sure there's nothing on the option side. Silver is just piggybacking up 3.4% pre-market. Silver has the dual industrial and the safe haven appeal. Well, that's pretty much it. Okay, let's pull up silver then. Alright, silver yesterday was sitting around these areas. We got a little bit of dip like we did on gold, and then finally we got that push right when New York session opened up. And then at the stock exchange open, let's drop down to the 15. So this was the stock exchange open, bearish candle closure, and then coming back and kind of just sitting into this consolidation. So let's go ahead and remove everything here and map out our levels again. So silver is going to do the same exact thing that gold does. It's just going to be a little bit more volatile. So that's why you're going to be extra patient here. And make sure that you're not just chasing any breakout, especially with silver. You're going to wait for gold to give you a breakout of those key levels that we just looked at. And then you have your trade setting up on silver. Silver is just a bit more volatile version of gold. All right, so now on the daily time frame, we got a dip down. Price coming right back into this consolidation. Easiest trade is first target into this daily consolidation resistance into your 65.77 or 66 area flat. Drop down to the 4-hour time frame. What I want is price to be able to hold into this 4-hour support of this consolidation. On the 1-hour time frame, you have 3 minutes until this candle closes. I want the next candle to give me a bottom wick, flip back up. This entire wick fill is your potential trade, and then going into that 65.8 area. On the 30-minute, it seems like we're currently reacting off of this minor level here to the left with some top wick rejections. If you look at exactly where you created that top wick rejection, we've had consolidation support and resistance. So that's why I want to see that bottom wick on the 1 hour, which is going to bring us down a little bit further, closer to the 64.8 and 64.6 on the 15-minute, and then a continuation up. So then you get to have a tighter stop loss right below the zone, and then a continuation up. But that only happens if gold continues pushing back up bullish. Right now, gold seems like it's losing out on the steam on 5-minute. 5-minute, you only use that for volume, right? But on the 5-minute, you have pure consolidation that's going on. So that's why we wait for gold first, and then we look for our silver trades. Taking a look at oil, oil just tapped into 85, but sitting right below it. We still have our key levels from Asian, 68, 80, 85. Next stop is going to be 90 and then 95. On the 4-hour, simply consolidating here. So looking at U.S. oil, the Iran threat to Hormuz is the live binary risk here. The market is pricing in contained risk. Hormuz is still open. If the few weeks Iran deadline creates a closure event, oil gaps violently higher. All right. Let's also pull this up, which is from this morning. So oil still kind of coiling, consolidating on the 4-hour time frame that we just looked at. The contained risk is because Hormuz is technically still open, and Trump insists that it's open. Iran says that it's shut to shipping. So 4th straight session of just gains that we are seeing on U.S. oil pushing up. We're not trading this actively. We're just watching oil for inflation expectations, because that's going to spill over to everything else that we're trading, whether it's the yen, like we talked about. Yen is going to get hit really hard as soon as oil gaps up, because Japan imports 90% of their oil. So as long as oil is contained, JPY continues to have its strength. But as soon as oil gaps up, you're going to see that strength in yen kind of fading away. So Iran has just set a few weeks deadline and declared full offensive posture. So oil is long bias right now, but we have limited downside protection going on too. Here is the new hourly candle. Let's go ahead and set up our equities now. Bottom wick rejection on US 30. 43 or 53,300. Candle body open 43,700. So a 400 point range this week already. Daily time frame, holding on to a support, pushing back up. I'm creating this 43 or 53,700 as my current resistance because that's where price has been consolidating for almost 2 weeks now. And so if price breaks above that, then the next stop is really going to be to come back up into 54,000, which is additional 300 point move. On the 4-hour, massive bottom wick rejection, and then a candle flip. That's happening right now. On the 1-hour time frame, last 1-hour candle, massive bottom wick, basically corrected this entire bullish push that we've had, and now you have a new hourly candle. So for any buy opportunities, what I want to see is price continuing to hold on to its own support. If price breaks below this, then we have those sell opportunities to come right back down bearish. So clean moves to the left, as you can already see. On the 30-minute, last 30-minute candle, this was the stock exchange open, massive bottom wick, still close bullish, price period bottom wick, it's pushing the highs. I'm going to wait for a little bit of a clear of that 53,700 or a rejection and pullback. Make sure that I don't get stuck in this small consolidation range. This is less than 100 points. And then set my alert right below 53,580 for my sells. NASDAQ continuing that zone to zone from the weekly resistance into 30,000. Drop down to the daily. Currently sitting at a daily support. Yeah, 29,300. All right, so on the 4-hour time frame, entire thing is a no trade zone. You do not trade in this little zone here. This is weekly kind of bottom wick where price is still hanging around, but also on the daily time frame. Very strong support level. We have seen bounces off of this level multiple times. On the 4-hour time frame, we have consolidation right here already. Drop down to the 1-hour time frame. You had a really nice push, and then after that, a retracement immediately at the stock exchange open. And then now with the new hourly candle, we're just trying to see if this is just going to be a bottom wick and then a flip back up. If that's true, then you have those buy opportunities to come right back up bullish here. So narrow in your zone, which for me is going to be if price can reverse right back up above this. Then I'm looking at those potential buys as price clears these minor levels to the left. For sells, it's only going to be below 29,300. Let's pull up the divergence here. So futures are quite firm this morning, but a little mixed. NASDAQ seems to be up. NASDAQ was up, but still cautious. We already see that. That translates out to consolidation. IWM small caps, hedging, and the Dow was under-owned from the institutional read. So retail is selling Dow and small caps Russell for 2 weeks now. Institutions quietly accumulating defensive infrastructure. And we have institutions that are building also the $13 million in SPY June 2027 put spreads. Long-term hedge structure, not any sort of panic move here. And then you still have your 13 million in small cap, neutral to bullish but hedged. So our biggest opportunities right now are gold. The risk there is going to be if we get a hawkish FOMC meeting minutes. Silver's going to do the same exact thing that gold is doing. Hawkish minutes will also flip the bonds. Let's see. All right, so our cleanest trade is going to be gold, but we're going to be watching what happens with FOMC. We might get a potential move today, right before the minutes come out, but I'm going to give it about another hour and a half. If after that, if I don't see any potential moves, then I'm just waiting for the minutes. All right, here's the full playbook for today. So September rate hike odds sitting at 30%. Goldman explicitly saying that September hike is very unlikely. Inflation data is soft enough to keep hike odds suppressed. So if we get a hawkish surprise, any sort of hike language, equities will be down, bonds are going to sell off, US dollar is going to be back up, gold is going to be very volatile, but it's going to be pressured once again to come back and reverse the entire momentum that I had this morning. If we get a neutral, like a hold confirmation, again, dovish basically is just a hold confirmation. There's no true rate cut conversations going on for this year, but if we hold this year, then going into next year, we can continue cutting those rates. So if that happens, if we get a hold confirmation, then equities will continue rallying back up. Bonds are going to be back up. US dollar is going to continue weakening. Gold is going to extend out its wins. If it's split, if it's uncertain, then expect that volatility is going to spike. It's going to be mixed signals. For pairs that are already going to be consolidating going into FOMC, you can expect that consolidation to continue. So right now, it seems like the market is pricing in dovish read. So that is our full playbook, and now we are just waiting for our trades. With small caps sitting at its own all-time highs, 3,070. Created a bottom wick into previous weekly consolidation resistance, 3,010. Dropped down to the daily time frame. So basically dipped right into this previous resistance, created a new support there, pulling right back up, getting that momentum this morning. Yesterday, we were just consolidating out. So here, if price can break its own resistance, we have those nice buys to come back up into those all-time high levels. If it breaks its own low. So for that, I'm going to watch the previous hourly bottom wick and then push right back down. I'm going to remove this and tighten this up here a little bit more. Break below this is going to give us our sells. Continuation up gives us those nice buys. Let's do our analysis on USDJPY. You've got your top wick rejection from this week, 159.8. Bottom wick rejection, 158.2. Drop down to the daily. We have broken out of that entire consolidation. This is a move down for about 145 pips already. So I'm going to create a zone here. This is your key zone where price was sitting right above that in Asian session. And then we finally ended up getting that dip back down going into London. So in London, we had a nice break and retest, a massive sell-off that happened. One candle that moved for about 100 pips already. So now if you look at where price is reacting, it's right into this area. So what I want to see is, can price hold on to a support here, bounce back up, correct this bullish or bearish momentum, and potentially target being somewhere around here. That is your scalp opportunity. Also a quick pullback and then a continuation down. We want to maintain those healthy bullish and bearish trends regardless of whichever way that price moves, because if it continues dropping, that's going to be overextended move. But also, again, depending on whatever the minutes are going to be, that's what's really going to help with this pair, because right now the news this morning is the one that really provided the weakness for the US dollar, because you're not seeing the same exact thing on GJ or EJ. So EJ is still sitting in the same consolidation from Asian, and then we caught a little bit of a move here yesterday during Asian session, and the price just consolidated. So looking at these moves, don't try to get like FOMO or anything, because the minutes are either going to extend this move, which is going to be a better opportunity for you to scale in, or it's going to reverse the whole thing. All right, we've got 3 minutes left for this 15-minute candle closure. So let's see if we can actually get a candle closure above 44.70. If we do get a bottom wick continuation up, we're targeting 4,500. And then for silver, that's going to be a really clean move to the upside into 65.8. Any questions? Everything makes sense?
No questions from me. Makes sense.
Cool, perfect. Anybody else? All right, got your thumbs up, Jen.
Hi, reviewing
Yes.
everything okay.
All right.
No questions for today.
This sounds
Thank
good.
you.
Yeah. Let's see if there's anything else that stands out that we haven't gone over. All right, seems like we have a potential monster squeeze set up in NASDAQ. $20 billion short from hedge funds plus insider buying at 15-year highs. Retail is buying dips cautiously. Institutions are hedging with puts and selling puts. Let us pull up our levels. All right, currently tapping into an institutional demand zone, which lines up perfectly with where our levels are as well. So the zones that I was talking about earlier into the analysis, when I was talking about the acceleration, especially with gold and all that stuff, the same exact thing here with NASDAQ. I'll give you an example here. If we see that NASDAQ continues to break below this demand zone, all those people who are sitting here waiting to buy, they're going to have to cover their positions. So when that happens, that's your forced selling that's happening in the market. That accelerates the move, which means that we then have a much better selling opportunity than trying to sell into the zone right now. We have a much better selling opportunity when that move accelerates, when you have that momentum and volume to the downside, to drop back down into the next demand zone here. The way that I use this across different time frames is if I see the same zone across the 4-hour, daily, 1-hour time frame, then I know that that's a very strong level. So the bigger the zones, the more orders that we have sitting here. So you're already tapping into a demand zone here. Right underneath that, you have more buyers, and right underneath that, you have some more buyers. We have a lot more buyers until we really can tap into that 680 mark, which is a massive sell until you drop back down closer to almost that 27,000 area. Versus it just taps into this, pulls back, then you wait for a little bit of reversal and then a continuation up, and that gives you your perfect swing trade. Actually, before we even hit the 27,000. Right here, the 680 is closer to 28, and then after that you have your 27, which is this level down here. Then we're going to check up the Dow. Let's come over to the daily. So it seems like we just had some buy orders kick in on the daily time frame, bouncing off of a demand zone on the 4-hour time frame. I don't really see that here. One hour, pretty close to it, but you have a supply zone, so kind of just hanging around here. Let's take a look at small caps. Small caps just got some nice buys. That is the resistance on the weekly time frame, right up top there. So that is where we are starting to see that demand zone forming. Drop down to the 4-hour. So we've got one down here, and we just got one recently as well on the current 4-hour. And then on the 1-hour, pretty close to another supply. So this is basically lining up with all the levels that we already have, which is really good. So we have now tapped into 410 for GLD. I think it has potential for another run up. So on the daily time frame, last couple of days, we got some really nice buy orders pushing back up. Really good momentum. On the 4-hour, you are entering into a supply zone. So this is where your sellers are sitting. We're pretty close to the top of the range here. If this candle can clear above that, all these people who are selling here, they're going to be forced to cover their positions, which gives the acceleration to come back up closer to the 420 area. Let's drop down to the 1-hour to see if there's any other supply zones that are sitting above us. Yeah, so closer to the 420 area, that's your next target point. If those people are forced to cover their positions, then we are going to head even higher. GLD. We are going to go even higher above the 420 into the next resistance, which is going to be your 436 area. So main thing is being able to clear above that, which pairs up on XAU USD with our 4470 area. So you got a nice 15-minute candle closure. You've got a bottom wick. Let's see if we can continue breaking our own highs. I'm going to set my alert there. If we look for sells, then I'm waiting for a break below 4470. I'm going to give it this entire room as my no trade range. If I see that gold can flip and continue pushing, silver is setting up really nice as well for those buys into 65.8. So those of you who can or who are trading silver, that's your move, as long as gold can continue pushing. If gold reverses back down, then silver is going to consolidate, or it's going to extend out its sells into 40 or 64.6 area. So the level that you should be watching, I'm just going to create a box here real quick, is this. So if you have a continuation up here, you want gold to break its own high, silver is going to break its own high, you've got your move up into 65.8. If price reverses, it gives you a retest into this area and then pulls back down even further, then those are your sells. Here is no trade, but this is your entire range that you can trade, and then you're going to see an acceleration of that move even coming back further into 64, depending on how the minutes are setting up. Right now, the market's fully pricing in that it's going to be a hold, a dovish type of a sentiment for the minutes. So that's why you're seeing the acceleration, but also a bit of a cool down after a nice rally. we're going to give it about 10 more minutes on the session and then just set our alerts whenever the alerts hit. So I'm still going to give about for another hour or so. If there's a potential move, but if there isn't, then we just wait for the minutes. Alright, I'm going to be right back. Just give me 2 minutes. Alright. Okay, really got a good momentum here on gold. So I'm going to set my alert for silver. I'm not trading silver. I'm going to be trading gold. But if anyone else is trading silver, we have the alert set for you right there. And then for sells, it's going to be right below 65. Matter of fact, let's pull up silver too. Alright, silver is sitting right between a supply and a demand zone, which means expect some consolidation. So either these people are going to be forced to cover their positions as soon as price rejects off of that, or silver should have enough momentum to continue breaking past this as long as gold can continue pushing too. About 17 seconds left here, so wait for that on gold. Nothing on NASDAQ yet, nothing on US 30, nothing on small caps. as fundamental wise, gold is bullish or bearish for the long term. So are you talking about the next couple of weeks? Or are you talking about next couple of days? If you can specify that, because then based off of that, I can tell you. Right now, off of the higher time frames, if you truly mean like long term, which is next couple of weeks to couple of months, we have just bounced off of a support pushing back up. I think we have enough potential to continue pushing up into closer to the 47, almost 4,800 area to come back and tap into these areas. If we're talking about the next couple of days, then I think we're neutral for the next couple of days, where you have enough bullish momentum to come back into the 4,500 and then just a little bit higher than that. But I think price is gonna have to correct a little bit, consolidate a little bit as soon as it taps into this. Monthly wise, yeah, I think we have enough volume to the upside here. I think we're gonna come back up closer to the 4,700s. All right, your silver alert just hit. Gold is pushing, and our target here is going to be 4,500. Also remember, you have 4 minutes left for this 30-minute candle, even if you are jumping in. I have 2 minutes left, so I'm just waiting for the 30-minute candle. Give me a bottom wick on the next 30, and that is my entry point. But this is really clean move. Just waiting for next 30. My target point would be 4,500. If it taps into 4,500 before the 30 is closed, then I just wait for a little bit of resistance, a bit of a pullback, and then a continuation up. All right, about a minute left. $30 seconds. So 30-minute, also nice bottom wick, push back up. Seems like it's about to close at its own high. I want the next candles give me a little bit of bottom wick and then push back up, and we're gonna catch those buys to the upside. All right, here's our new 30. NASDAQ is still kind of in between this no trade range. Small caps, massive bottom wick, flip back up. Bullish, weak bullish. NASDAQ closed bearish. US 30 still closed bullish here, but kind of consolidating. We got our little bit of a bottom wick. Break its own high. So this is how I test the volume when I'm looking at the 5-minute time frame. I know that on the higher time frames, I'm looking for a bottom wick and then a continuation up. So like on the 30, I want a little bit of a bottom wick. On the 5-minute, I'm trying to see, it created a top wick here. It broke the previous high. So that tells me that there's enough bullish volume for this to continue pushing up into 4,500. Now it's a matter of just the entry. If it can break its own high here, I place my stop loss down here and I target up top there. So that's the volume that I want to be trading. Let's check up on GLD real quick too. GLD is pushing up really nice. We have cleared that 410, which means that all those people who are sitting there with their sell orders are now being forced to buy in. You can check the same thing on the 30. And your 15. So last lower time frames will give you a little bit of a weaker confirmation in my experience, but I pair it up with the 1 hour, 4 hour, and the daily time frame, and that gives me really good momentum. So now we have gotten in my entry. Profit 4,500. Stop, I want to give it the 5-minute candle. So let's give it a 1-to-1 at least. So the way that I'm going to manage it is I'm going to keep my stop here. I'm going to try to take this move up into the 4,500 area. That is my first TP. If price can continue pushing after that, then I hold on to the trade. If it kind of just taps out onto that level and consolidates right before the FOMC meeting minutes, then I just basically take this move. My bigger move on gold is going to come from the meeting minutes to see if we're going to continue that bullish volume from this morning to the upside. So I'm just going to go for a 1-to-1 on this trade. This is the type of move that you take your 1% risk on, and then your 2% normal is going to happen with NASDAQ breaking above the zone and a continuation. Nothing on US 30, so you wouldn't even do your 2% there. But NASDAQ, gold breaking above 4,500, that brings in your 2%. So this is a very extended move that we're looking at. So this is why we only do 1%. Today's not the day for your 3% risk. And silver continues. First 5-minute of the 30. So I'm seeing the volume die down here a little bit. So that doesn't, as I'm watching this, I'm basically just thinking if I have potential, if price pushes up to increase out that TP. The way that I see the move right now, it's probably going to consolidate a little bit. Even if it taps into 4,500, I don't think it's going to have enough volume to break past that before FOMC. I think that might be just a quick little move. You take whatever the market's giving you here and then pull back. Ideally, I would like to see a pullback into the 44.70 or a little bit deeper right before FOMC. So then that gives us a much bigger range to take the entire thing to the upside again. And that is, again, contingent on getting dovish market sentiment. TrendSpider is, it's a charting platform that have a lot going on. Basically, it could replace the whole trading view for you. But the reason why I like it is because it makes the research side for me a lot easier. Usually before TrendSpider, I was like pulling up articles, looking at data points. I was doing a full research before I came to the charts. So TrendSpider actually gets their data directly from the sources. So talking about like NASDAQ, NYSE, OPRA, FINRA, SEC. So it pulls all that information, OPRA, it pulls all that information directly from the sources, unlike, Claude or ChatGPT or something. Like if you're asking some other AI to give you analysis of the market, they would be pulling information from all over the internet, right? And so some of that information would be accurate, some wouldn't be accurate, and then it kind of just gives you a consolidated. So then it's your job to go out and kind of verify that. Versus with TrendSpider, I don't have to do that because I know that this is all real data points in real time that is going on. And then it gives me a full analysis of the market. So whether I'm looking at options, whether I'm looking at, with FOMC, what's happening with the macro side, if I'm looking at bonds, like stocks, crypto, it can do the same thing. We use this for our Asian sessions for our JPY crosses, so it helps out with Forex as well if you're trading any Forex assets. So all of that, commodities. So it has all the assets that you're basically looking at. It can give you the full analysis. Another thing that I have really started liking this for is, and of course, like if there's any divergences. So when it talks about institutional data points, it's talking about the hedge funds, it's talking about the big banks, it's talking about the real institutions themselves. It has access to, the dark pool, basically, which is what's happening off exchange. Any insider trades that are going on, it'll give you the full information on that too. So it's basically everything that you could ask for, right? So there's a ton of data points as long as you really understand how to use all of it very correctly. Earnings, what's going on there too, a full playbook, it'll give you that for FOMC meeting minutes. This is our playbook for today, depending on what type of sentiment we end up getting for the FOMC minutes that come out. And then what I also use here is the supply and demand zones. This is an institutional supply and demand zone. So the levels that it talks about on Sidekick, for example, let's go to the option side. So here when it talks about, massive puts, for example, for IWM, bought and sold at 288, 289. You have gold, November 425 calls, 1.2 million. All of that, it's getting charted out or mapped out onto your chart. So it tells you those orders, where are they sitting immediately. And if there's any new orders that are coming in, you'll see the boxes forming immediately. So we had, for example, the supply zone that was sitting right at the 410 area. Now all those people are being forced to cover their positions. So you're going to see a lot more volume in gold pushing back up, right? So those are the big orders that are kicking in. So TrendSpider gives me the full analysis. Basically, I don't have to go out. I don't have to double check my information, which, might be good, but I don't have to do that. I trust that I've used it long enough that, this is pretty accurate information. And I can translate that over to my charts here too. So with XAU USD, obviously the price levels are different, but just understanding you can translate the prices or the candlesticks and the price action to this too. So I can use it for everything: stocks, crypto, options, futures, whatever I want. And they always have like sales and stuff going on. So if it feels like, it's expensive, there's always like the 14 days for $5 trials going on. There's like massive discounts that are constantly happening. But yeah, that's why I like TrendSpider. All right, we're 3 minutes out from a 15-minute candle closure. I'm going to reduce my exposure. I'm not taking partials or anything, but I'm going to reduce my stop right below the entries candles 5-minute bottom wick. So at this point, I'm just going to take with whatever I have. If you want to continue holding this out, if you see that there's potential to break above 4,500, you take some partials here, you move to break even, and you let everything else run. I'm just taking whatever the market's giving me here. And then I want my better positioning after FOMC. Absolutely. So today we're still going to have our Asian session on YouTube as well. It starts at 5 p.m. PST. And I guess we're pretty much done here. We've got really close to the 4,500, took whatever the market gave us. And then we have our alerts set for everything else. NASDAQ did push into that zone a little bit, but it seems like it's not ready to break out of that just yet. So I'm personally waiting for another couple of hours. I'm waiting for the FOMC meeting minutes to come out and the type of sentiment that they're going to be setting up, and then see if these moves are going to extend out. The rallies are going to continue extending. All right, guys, that's it.